So we've got this special interaction going right now with Vishal Kampani of JM Financials on the sidelines of the 8th conference which they're holding in Mumbai right now. Vishal, thank you very much for chatting with us.
Thank you.
Let me start by understanding your thoughts. At the time you're holding this conference, the markets are at all-time highs again, the benchmarks at least, broader markets yet to catch up, and people are again discussing the same point. Is there a disconnect between the market and the economy, or is it something which market is sensing which lies ahead? Which side of the argument do you lie?
Yes, so I'd like to begin by saying that markets are always forward-looking, and there's always a hope and expectation built into stock prices. And I think the government is doing a lot in terms of the economy. There is no doubt, you're completely right, that there is a disconnect between where the market valuations are and where the economic reality in India today is. But I think with all the steps being taken by the government, and if you see some of the micro data which is coming out, whether it's real estate sales, whether it's the last 2 months of consumption, I think that it's pointing towards a change in confidence. Now, I don't expect things to turn very quickly, but I think over the next 6 months to a year, you will definitely see a positive turn. And I think the markets are pointing in that direction.
Sure. When I saw the list of corporates which are attending your conference,
right,
you had a fairly good mix of large and mid-cap, and among mid-cap, the biggish mid-caps.
Right.
I want to understand from, and many of these names are still away from their lifetime highs and probably did not come back at the same way like benchmarks did. I want to understand from you, how do you rate this side of the market in terms of valuations and also the feedback which you get from your clients regarding appetite over here?
Yes, that's a great question. So I think what India is seeing right now is something called an expensive uptrend. And you see that when people want to buy very safe names and safe stocks. You are not only seeing that in the equity markets, you're also seeing that in the credit markets today. So there is a clear expensive uptrend. So people are finding safety on the bond side. You're seeing a lot of spread, huge sort of depression in spread, where AAAs are being able to raise money at extremely low rates, and that is not following through for the AAs, right? And the same thing is happening in a sort of way in the equity market. Stocks that are very liquid, large companies who are able to grow even at 10 to 20% are trading at 40 to 50 PE. So this is kind of an expensive uptrend which you're seeing in the markets. And I think the opportunity today is to actually look at mid caps, and on the credit side, look at some very interesting AA papers. So on the both sides, the valuation is in favor of maybe some of the smaller companies and the mid-cap companies, and the valuation will not be in favor for some of the larger companies.
And talking of fundraise, there was this really huge fundraise that just happened days back. You also were one of the bankers, which is Bajaj Finance.
That's right.
It was a big QIP. I mean, I don't remember. And then we talk, are we still in a bear market for a 4,500 crore offer? There was 42,000 crore response coming. How did that happen, and how did you analyze that kind of response?
Yeah, so the offer was 8,500 crores, but yes,
yeah,
it saw unprecedented demand. But Bajaj Finance is a unique company. I think it is one of the best financial services businesses in India. It has a long history of operations. It's managed their business successfully over cycles, and it's operating with extremely high quality of assets in terms of asset quality. And the growth rates have been phenomenal over the last decade, and fantastic management, top quality governance. So when you see a company like that, and which is able to grow at say 20-25% over say half a decade more, there is tremendous interest from FII investors, domestic investors, everyone, right? And that's exactly the play you saw in the Bajaj Finance QIP. So we had almost 40-45,000 crores of demand, and from the highest quality investors. I mean, you name the investors globally as well as locally. Everyone was interested in a pie of the deal.
Last couple of quarters, including this one, we are always quite cautious that will they come and talk something about demand on their own business loan growth getting muted, or will they guide down. It doesn't happen. And the company is reporting solid numbers quarter after quarter. But the valuation question always comes for this company.
Yeah, but if you look at it, I think if it can keep growing, right, and maintain asset quality, I don't think the valuation is really a challenge, right? Because you have in the same sector banks also, which are growing at much lower rates, trading at very, very high multiples. And if you just move out slightly from consumer finance to the consumer sector, I think the PE multiples compared to where the growth rates are both on revenue as well as profits are much higher compared to where Bajaj Finance trades today.
Well, some people in the market say that it's actually an NBFC with the soul of a bank, and probably that's why. So let's shift focus about your own industry on the business side for a moment. There have been, to hell and back, I'd say, for NBFCs the last 15 months.
Yeah, to hell for sure, back I'm not sure.
But if you look at the way steps from the government side have been taken, some of the companies, including yours, some of your peers have been successfully managed to raise money either via ECBs or NCDs. So they've improved their capitalization levels versus a large lot which has not been able to do that. How are you analyzing things as they stand as far as NBFC space goes?
Yeah, so I think, and I've said this before also in a couple of interviews and conversations, that the issue started off with being an issue focused on liquidity. But I think the issue now has moved to asset quality. And extended period of not having liquidity can result in asset quality issues. The good part is that the government has realized this. Many of the large banks have realized this, and there is a lot of support coming in for NBFCs, and we are seeing that on the ground. Especially this last scheme which has been announced last night by the finance minister is actually a fantastic scheme, giving 25,000 crores of priority finance for completion of real estate projects. To me, will release 1 lakh crores of liquidity in the sector, right? So of course, because when you look at a real estate project, right, 25,000 crores of projects where they're already under construction. So when you finish the project, 25,000 crores is normally 20% of sales. Construction cost is 20% of sales, right? So if 25,000 crores is the number which is going to complete these projects, you're going to release almost 80,000 to 1 lakh crores of cash flow into sales in the system, right? Which is a big number. You take Bangalore as a city, for example. Say the average selling price in Bangalore for a unit is 6,000 rupees a square foot. The construction cost for that unit is not more than 1,500. So as long as I spend the 1,500 rupees per unit and complete the unit, my receivable cycle of 6,000 rupees comes back into the real estate NBFCs and the developers and the entire supply chain of real estate.
That's
whether it is steel, cement, ceramics. So the finance minister has not given us a 25,000 crore boost. She's actually given us a 1,25,000 crore boost, and which is what the market is not being able to see. So I think it is a fantastic step, and she has she's gone and addressed the core of the issue, which is a fantastic move last night.
So you mean to say that this 25,000 crore is actually potent enough to release over 1 lakh crore worth of liquidity into the system?
Absolutely.
Over 6-8 months, or how much time would you
say a year to 2 year cycle, right? But it's a lot of capital focused on a single sector below 2 crore homes, which is amazing, right? Because I'll tell you, the maximum money in this country is stuck in real estate, right? I go for a morning walk and I talk to a few friends, right? On average, right, half of the capital is stuck in real estate. Either it's projects not completed, or either it's projects completed where they're earning a very, very low yield on their investment, right? So this is the most important sector for India, right? To make sure this sector revives. For the Indian economy, this is absolutely the most critical sector today. And she has taken clear notification of the same, and she's putting in steps in place to enable their liquidity and the confidence booster that this home that I've invested in is going to get completed.
Sure, fair point. You also interact with a host of companies on ground because of your association with them on NBFC side, investment banking, research, etc., irrespective of the size, and some listed, non-listed as well.
Right.
What is the situation on ground in your view? When we speak to, say, a Titan, they've cut down their guidance, but a Bajaj Finance says no need to cut outlook yet. So we get mixed signals so far in the second quarter earnings. What are your thoughts on when you meet companies across the world?
So see, specifically on Titan, it may not be an issue only about demand. The issue could be trends, right? So do younger people really want to buy gold jewelry, right? Do younger people want to buy watches, or they want to buy smart watches? They want to buy Apple watches. They want to buy watches which are linked into their phones, right? So it's it's more about consumer behavior. Bajaj Finance is a financing model, right? So as long as the consumers want to buy something, their financing is available. A specific consumer company is about its own product. So those are two different categories. But I'll tell you one thing that, see, in the last 20 years, if you look at India's 2 decades, right? What Indian corporations have gotten very smart about is how they allocate their capital. And for a long-term investor, right, the most important thing is how a management of a company, how a board of a company, and how the CEO of that company thinks about its capital allocation. And across all my conversations with all of our clients, right, we clearly see a trend that Indian corporates have become very smart about how they allocate their capital and how they make returns on that capital, and which was not necessarily true in the last 2 decades. And this is a big fundamental shift you're going to see over the next 10 years, the next decade, which is upon us in the next 2 months, where you're going to see smarter utilization of capital that is given to private India, private corporate sector to invest. And this, I think, is a big theme which a lot of big global investors, whether private equity, whether sovereign or even FIIs, are looking at, and which will result in higher returns on capital over the next 5 to 10 years, and thereby making India a very attractive investment opportunity.
So willingly or circumstances forced upon, corporate India has become very careful about capital allocation.
Absolutely.
Is the one message
Absolutely.
you have. I also understand that you're working very closely with several high quality, interesting startup disruptors.
Yes, we are.
How's the appetite from your investing friends and fraternity towards this area of the market, where we are observing huge inflows, where the listed space still is not really getting the same kind of money still from the FIs?
Yes, so there is very high interest, but at the same time, one has to be careful. Because I think the burn rates of some of these companies are very, very high. And if you have concentrated capital, or rather concentrated source of capital, which is funding some of these companies, that to me is a high risk event. Because if that concentrated source of capital is not being able to put more money to work, it should not lead to a halt of operations at the startup's end. See, for a startup, the most important fundamental thing is that they have to constantly raise money. See, when you're approaching a new sector and you're thinking about a new design for a new sector, right, you're bound to have a lot of burn, right? Because you're taking a different, more comfortable approach, but when you want to grow very fast and get customers used to that approach, right, you want to make sure that you have enough capital to be able to burn through reaching that peak size where you become profitable. And that can be a 10-year journey. So capital is available, but I would cautious Startup India. I think they should broad base the kind of capital they are raising. They should not be depending on single or dual sources of capital to raise money. And they should have an eye on profitability finally at some point in time, and not just be burning capital.
So Vishal, how do you see the economy from here on? We have done a couple of quarters of around 5% growth, and the fear is probably the cycle may get prolonged, recovery cycle. What's your own thoughts on the recovery which lie ahead? How many quarters where you can nudge back towards 6.5?
Yeah,
7?
so I would think that the next 4 quarters we still have to be cautious. I think the steps the government has taken, you will see changes very quickly on the economy in the next 1 year. But I think still things may get worse before they get better. So one has to be cautious on the economy front. But I must say that the government is very focused on it. RBI as a regulator is very focused on it. And we are hearing all sort of positive noises, which is a good thing. So I don't estimate this to be a prolonged slowdown. I think there'll be a bounce back. See, having said that, there are global concerns on growth. I mean, we've talked about this last couple of months, and there have been some drop in estimates of global growth next year from IMF and many other bodies. So that of course is of course a concerning factor, because you have these trade headwinds, right? And if you have less trade, it means you will have less GDP growth. So how India performs through this cycle of lower global growth, domestic liquidity challenges, and wanting to maintain the fiscal deficit, and how India is being able to perform through this is going to be a challenging task. But I'm very confident with what we have seen in the last 2-3 months. I'm fairly confident we will do well.
So since all of that actually seems a very tight rope walk for corporate India, at least, markets meanwhile, because good prices and good news would not come together, next 12-18 months, do you think it's a good time for investors to deploy funds which they've raised and been sitting on, perhaps had raised money earlier in the cycle, booked out profit in 17-18 months, you think it's a good time for portfolio allocation?
100%. So I think, as I said earlier, I think I would have a larger portfolio allocation today towards mid-cap stocks, some at attractive valuations, and where we see good, robust cash flow generation on the public limited side, right? On the private side, you already have a slew of private equity as well as venture capital funds funding projects, and venture capital and private equity are seeing their peak historic levels of funds raised. So there is a ton of capital which can fund private companies in India. There's no dearth of capital on that front. Okay. So that's not an issue. And on the credit side, I think there is a amazing opportunity to invest in maybe AA bonds over AAA bonds.
One last question, it just occurred to me. Corporate governance issues in the last 15-16 months have really come to fore. Companies where there were question marks have been derated. Companies which are above par have been assigned premium valuations. But sometimes very high quality companies also come into corporate governance glare for some reasons, some whistleblower complaint, etc. all of that. One recent example we saw a couple of weeks back. You may choose not to talk about the company in particular, but do you think that this trial by fire will continue for some time till we are in this kind of a risk-off environment in India?
Yeah, I think totally. I think the trial by fire will continue for a period of time. And I must say that, governance is very important, right? End of the day, and most foreign investors today, that is top priority for them. And if companies are low on governance, I think they will take a large beating in their multiples. And you're seeing that, right? So Bajaj Finance, another example we talked about earlier, top quality governance. I mean, the one thing that comes to my mind when I think about Bajaj Finance first is governance.
But I was referring to Infosys, high quality company, but still somehow they get between crossfire.
But you heard the statement from Mr. Nilekani today, right? So, he's referred to God not being able to change numbers. So, I'm sure they'll come out of it. Yeah.